Hello, everybody. Good turnaround Tuesday. Warriors, how are you? Kevin, Patrick, Ziggy, Windsor, Zia, everyone doing okay? I just noticed that Nick went to the door. I believe it was her Euro Aussie for a profit. Just in case you guys didn't get the push alert, Nick has been on fire. Still has one pip in play up on the Euro Kiwi long. Everyone doing all right? Ziggy Morrow? It was? Oh. Thank you, Lee, for the correction. Next. Anyway, turnaround Tuesday candidates. I look at the Dixie here, and to me it looks like we're still flagging. Well, I think her long Bitcoin more than compensated for that. Hi, Glenn, how are you? Gee, if you went long Bitcoin when she was talking about it live last week, I think you did okay. So to me, this still looks like we're flagging in the Dixie. So for flagging in the Dixie, bull flag, still think that you could try it here. You had this impulsive 1 4-hour bar candle pulling back in a corrective fashion. I think you could buy this with stops under 93. I don't think it should correct any deeper than say 93.20 or so. So even if you had a stop under the low, it's not a big risk. Potential is up to 95. And then I was looking at the potential for a few 3 drives, 3 drive to a bottom in the guppy, but RSI-wise, really not setting up. The 1 hour confirmed the low. So if I ignore the RSI, I think there's a shot here for this to turn. Conservative thing would be to wait for it to get back inside of the wedge line, which comes in around 81, closing back in there. If you like to hear the ice crack, you take a bottom pick there and use some type of money stop. You don't want to marry it in case it really turns into a meltdown. So if the dollar's a bull flag, the euro's a bear flag. So really comatose, dog day of summers type of action, but I see this as impulsive. Got there in 3 candles in 3 hours. And since Friday, all it's doing is marking time and correcting, probably not even halfway back yet, or 61.8 would be 1840. And then the other wedge formation that we have working right now is in euro pound. Again, I'd wait for a red candle back inside of the wedge line to go with it. Just want to bring this up. I want you to take a look at the weekly on euro pound. So we came very close all the way back here in 16 when we traded 92. It was really a confirmed high. So eventually we may take out this 92, but for now this could be like an 88.6 retrace up here, and we could get some type of correction. Looks like a rising wedge to me. I think it might be a reasonable shot trying it here, although I did see some harmonic counts that could take it up to 91.5 or so. So be on alert for potential short in euro pound. And the euro, for it to turn negative on the week, isn't going to take much. The 2-week off number is 1750, call it. So even back to the off number, which we haven't done yet, I think that could be a possibility back to 1740, back to 117.50-ish. So that's about 60 pips from here. The other potential reversal, the boy who cried wolf, is the weekly reversal in the S&Ps. Look at how small these ranges are the last 3 weeks. You know, it's not going to take much for a correction to start getting going to the upside. downside, excuse me. And the off number is 24.71 with us at 76.30. Everyone with me on that? So potentially a scalp here. It's tried the 2480 level. I don't know how many times from when we talked to Jeff Cooper, 2480, 2480, 2480. We start taking out this 2473 level. It's going to look vulnerable. Could be a 24.5 in a heartbeat. Okay, Luca. Yeah, pound Swiss. Okay. Yeah, I'm afraid to trade cryptos. Oh, you're zigging more? Oh, no. Okay. We have a great guest today. In fact, Don Mead is a market veteran, and he sent me an email saying that he's getting a signal that he's only had 4 times in 52 years. So stick around for that. That's a pretty rare signal when you only get it 4 times in 52 years. Looking forward to talking to Don Mead at 7 Sentinels. This is going to be the first time I talk to him.
Let me guess, Dale. Good morning, by the way. It's not signal. It's not a signal to buy stocks, right?
That would be too rare, would it? Huh? That happens every second.
Every 50 days.
That's happened every second for the last 8 years. There's been one of those.
Yeah, true. Very true.
Yeah. How are you, buddy? You sound like you've caught up on your rest.
Yes, that's what I'm trying to do. That's what I've been advised to do. And the summer period and the quiet markets and the fact that the development team, half of them are already on vacations, is obviously helping, because generally we've entered the period that's very quiet from this point to the end of August. Everything calms down.
Yeah, Blake says until where are they going to meet? All the Bilderbergs and the Council of Foreign Relations are going to meet at Jackson Hole. All the puppet masters will be there to cue each other in on what they're going to do into the fall. So
although that makes us the puppets, which unfortunately is true, but yeah.
I'm just I'm feeling, oh, my left arm went up. Someone pulled a string. So I'm not sure if Blake's around, but I'll tell you something. Is Stelios here? Blake, you here? Good, because you know what? Stelios tried to duck out. I'm here. He tried to duck out yesterday by saying he didn't have a good connection at the beach. But I'd like the whole team and the community to wish Stelios happy birthday.
Yes,
happy birthday to you. Happy birthday to you. Happy birthday, dear Stelios. You write the best macro analysis. May this be your best year ever. Happy birthday, buddy.
Best present ever. Thank you, Dale.
All right, man. Hope it's your best year ever in all ways. What are you doing besides yawning this morning, Blake? I'm sure you're up to something.
No, I mean I've got some dollar longs on, but they're not doing any good. It's just and looking at what had transpired on Friday with the dollar strength that we saw, I'm really quite surprised the dollar hasn't had any follow-up strength since then. It's just been meandering and it's been moving lower. Well, I mean, unless you're short the cable, then that's a different story. But overall, I mean, I've been wrapping things up trading wise. I want to say every day for like the last week by around noon Eastern. I mean, there's not anything going on. And maybe today is going to be an anomaly, but I doubt it. It's the summer, and the data that everybody's waiting for this week is is coming in on Thursday and Friday with producer prices and then consumer prices on Friday, producer prices on Thursday. So, I mean, I'm just sitting here like most people. I'm just yawning, just trying to, I mean, the range in the euro dollar has been what overnight. We've had a 30 pip trading range.
Yeah.
Yeah, it's, I mean, just a really tight range. The stock market, as you mentioned earlier, Dale. I mean, this is the S&P, and I mean, you look at it over the last 2 weeks. I mean, we've had a let's see, 58 to 83. We've had like a 30-point S&P range for the last two and a half weeks. Really,
this is the quietest period in history, by the way, Blake.
Yeah, I mean,
the recent, yeah.
Yeah, I read that as well. I mean, it's just a very, very quiet market conditions, and so it's easy to get yourself into trouble on days like today, by over trading. So I'm taking the high road and trying not to trade too much. Just like I said, I'm long a little dollars, and whenever I get in a slight profitable position, I just kind of pull them and move along. I mean, it's
you got to take what the market is offering. If it's not offering anything, there's nothing to take.
Right. And I'm sure one of the things about when you use like ForexAnalytix, this is a great example. Is you use ForexAnalytix, I'm sure people are coming here and saying, okay, they wake up in the morning and they're like, okay, I want to trade. Well, there's when there's not a lot to do, you'll notice that the patterns in play, we don't have a whole lot going on here. I mean, there's just a lot of choppiness in the market. So there's not a lot of reason to be trading a whole lot. And I'm sure something will develop, but it's probably going to be far and few between in the month of August. And yes, we do have Jackson Hole, which I will not be present for. I'll be actually, I have a family reunion that I have to take to the Midwest of the United States that week. So I'm not going to be around. So likely there's going to be an explosive movement because I'm not going to be here because I always miss out on all the good moves. But that's happening in that's August 24th, 25th, 23rd, 24th, 25th.
Okay.
Wait,
So.
Is that right? Yeah.
I'm going to run a covert operation up there and just eavesdrop on the power brokers.
There you go. I mean, it's good. That's the time you want to be. That's the time that you're going to have people somewhat interested in the markets. But between now and is it Labor Day weekend?
Yeah.
Yeah. Between now and Labor Day weekend, which is September 2nd, 3rd, and 4th, that weekend, you're not going to have anybody really too active in the markets. You got a lot of Europeans that are on vacation. I mean, look, Stelios is even on a Greek island on his birthday.
But he's always on vacation.
We could argue that point. We could argue that point.
How many islands have you been to this summer?
Well,
that's a good one.
He doesn't remember anymore.
We didn't do many holidays, so this summer already three and 2 more coming up. So we're okay.
I think the only island you haven't been to is Gilligan's Island.
I mean,
anyway.
five islands in a summer. I mean, okay, and this has nothing to do with the markets, but I can ask Steve and Stelios this: how many islands are there in Greece? And I've heard the argument that you could spend your entire lifetime traveling to islands and never run out.
Yeah, there are hundreds.
Is this true?
Hundreds.
Hundreds, yes. But you have to remember one thing: it doesn't have to be expensive. That's the nice thing. So we're going around islands, but it's actually very cheap overall. So it's not like going to the Caribbean or something.
Yeah, I mean, I've been to I think 6 islands in the Cyclades in Greece, and I've hit the expensive ones, the tourist trap ones, but I've also been to the ones that aren't aren't so touristy, and the prices are a whole hell of a lot better.
Yeah, you guys are lucky to have that within your proximity. I mean, you're there in a couple hours, right, Stel? Almost any island you want to go to.
Yeah, there's so many options.
From 1 hour, the closest.
1 hour? Oh my God, that's something.
The closest, yeah, to several hours. I mean, the faraway ones can be like 12 hours by boat.
Well, for most Americans, the Greek Isles is kind of a dream trip, really. And you guys, it's your backyard. So greatly blessed, man. I could go to Coronado Island, Blake. It's about an hour away.
You could, and you can go to Catalina.
Oh yeah, I forgot about that one. Yeah, that's a boat ride. Very exotic, like a Greek island.
Yeah, no, I'll tell you, as an American who has traveled to Greece a couple of times, it is a dream vacation, and those guys are very lucky to have that right in their backyard, because I've got these sand dunes right over here and some scorpions, which is awesome. I mean, there's that's not quite anything like it.
Should we approach the Ministry of Tourism of Greece for a sponsorship for the webinar? What do you think?
Yeah, that would be great. Well, the one thing that's going to hinder any type of tourism in Greece is this euro that's trading at 118. And I'll tell you, the euro, since I want to bring it back to the markets a little bit, the euro is still really quite bullish, and I have to go out and take a look at the daily chart, but really zoom out here. I mean, we got that rejection that I assumed we were going to get last week, as we hit the 2010 lows. We spiked a little bit above it towards 119, and then we've come off. But while we're trading above 117, the euro is still quite bullish. I'm even though I'm short a little bit, actually overnight I shorted some at 15, so I'm literally up 2 pips right now. But I'm a little nervous that while the euro is trading above 117, that we might not get a pullback. And I've explained this on the week ahead videos, that I have a hard time justifying a reason for being long the dollar other than it's technical and it's oversold. And the longer we hang out up here, the longer people like myself are going to get frustrated. We're going to say, well, I'm not getting any bang for my buck being on the short side of the euro dollar. I'm going to have to close it, because I'm not going to sit around too long. I mean, I look at the euro and yeah, we're banging our head up against a 50% retracement, but I'm not going to let it go too much higher without pulling the plug. And I'm assuming anybody who's trying to play counter trend like myself is probably feeling the same way. That it's not going down, and yeah, the longer it stays up here, the more the Greeks are going to suffer. How's tourism on some of these islands that you've been to, Stelios? Just as a barometer, or a, kind of a little litmus test of how tourism in Greece is going this season.
Actually, this season is very, very good. From what I hear and what I saw.
It's
apparently
insane.
It was like a record year or something like that. So the fact that things have cheapened up a lot has brought a lot of people in, and uncertainty in Greece has come down a little bit in the last few months, year, let's say. So I think people are.
There is a third factor, that Turkey, with everything that's happening, Turkey and anything that's on our east coast and on our south is also now considered not ideal. So, we're getting a lot of spillover tourists from there as well.
I could see that, yeah. Like, I wouldn't want to go to Turkey right now to visit. So, and where I would assume, yeah, a lot of the tourists, are funneled.
Ever since I saw the movie Midnight Express, I've been a little hesitant. So, do you remember that movie?
Oh, yes. Quite a nice movie, actually.
Okay, so, that's my nightmare. I'm looking at this euro chart you have up here, Blake, and I think the question is, which stops are they going to go for first? The lows on Friday or the highs from last week? Because that's where there's some liquidity for algos to go for. So
Yeah.
I still think they go for the Friday lows first.
Yeah, you know, I'm hoping they do, but
Yeah.
I'm not.
They could go the other way.
Yeah, I'm not 100% convinced either. And you know, you'd mentioned the euro pound earlier, and you're like, well, the euro pound might be a good short here soon. I look at it and I look at the euro pound and I'm like, man, this thing is still. I mean,
rocking.
It's still rocking and rolling. While this thing is elevated, it's going to be really tough for the euro to sell off. You know, yeah, well, the euro pound is one of the most liquid currencies in the currency market. It is, you know, a lot of people dismiss it because it's, you know, it's not a dollar cross, but it is really probably, if I had to, and I don't know this for sure.
My favorite cross.
I want to, it is when it's moving, when I can call it right. It's one of my favorite ones to trade. And I've traded this thing. I've made actually a lot of money over the years in the euro pound. And right now I haven't been wanting to buy it up here because it's not at a point where I want to be a buyer. But it hasn't reached an area that I want to be a seller either. After playing it to the long side from down here, I've been a little hesitant as we have been near our 618. So really the last, like, you know, this whole summer area, I've really stayed away from it ever since, you know, from here to here, I was playing it to the long side.
Yeah, you were real bullish. Nick was real bullish.
Yeah, and the last couple months has just been, I haven't been wanting to play it up here, but I haven't seen any reason to really short it either. But while the euro pound is bullish, it makes it a little bit more difficult for the euro dollar to come under any. Yeah, exactly.
Yeah, it's still saying the euro should be your preferred long. I mean, if you don't trade it, it's a great tool for trade selection. I won't go into the American Idol analog, but you know, it tells you when it's trending up, you should be buying breaks in euro, selling rallies in cable.
Exactly, so, and that's what we call the cross rate effect. That I think a lot of people dismiss the idea of that, and it's really, you know, you take some of these currencies, like whether it's the euro pound, euro yen, pound yen, you know, those currencies tend to have a lot of what I call cross rate effects. So if the euro pound is making a major break out or break down, it really does influence how I trade the pound dollar or the euro dollar. Or, you know, if the euro yen is making a big breakout or big breakdown, it influences how I'm going to trade the dollar yen or the euro dollar. So I look at what I like to call the cross rate effect when you have some of these major pairs like the euro pound on the move, and it is bullish right now. So like I said, as long as this euro pound is breaking higher and it's not, you know, it's staying above like this. This was a pretty key move here over the course of the last you know, week. This right here at the 90 pence level, you know, as long as we remain above 90 pence, it's going to be real difficult for the euro to get too much downside, I would think, unless there's some news that's really driving it. And we haven't seen any news out of like the Brexit news that's really moved the market. Now, one thing that I do want to mention, not because it's Stelios's birthday, but because he wrote this last night or over the last couple of days. You guys have to go read, and matter of fact, I'm going to blog it as soon as I'm done here, excuse me, I'll tweet it. Stelios just wrote a good blog on the Bank of England and the pound, and so I think you guys need to go back and read this blog. And like I said, I'm going to tweet it out here in a few minutes when I pass it over to Steve. It's a really great read on the Bank of England, Mark Carney, some thoughts on the cable. And it might give you a second thought about being too bearish the pound at these levels. Now, but I will state this, and I know Stelios knows this from the last couple of days, and I know Steve does too, because we've talked about it. The pound has really underperformed, and it's really been the underperformer as far as dollar weakness goes. The pound, I would have figured that the pound would have been trading up at 134, 135 by now, with as bullish as the euro has been. But when the euro finally found a top late last week, the pound really suffered as we had expected. Now the question is how much downside is left in the cable, and I don't know. I mean, we're at a 38% retracement here technically. I don't see any reason why the pound's going to bounce just yet technically. You know, here we are at, you know, trading at support. I still think we're going to trade a little bit lower, but I would be in the camp of wanting to buy the pound at some point. I just don't know if this is the, you know, this is the area just yet, if I have any real reason to be doing it just at this moment in time. But once again, it's the summer. There's not a whole lot happening. You can't, as much as I'd like to just sit here on ForexAnalytix and put a 1,000 patterns in play of things to do, unless you're scalping intraday and you're just trying to take little 10 pip moves here and there, which that's exactly what I'm doing. That's the kind of approach that I'm taking at this moment until, you know, Thursday, Friday. And then we also have the RBNZ Wednesday night, tomorrow night, or Thursday morning in New Zealand that might be a market mover. But I look at the Kiwi yen. The Kiwi yen continues to get hit. The Kiwi dollar is underperforming. You know, the Kiwi dollar actually still looks like we've got this head and shoulder pattern. It just hasn't done anything since we noted it yesterday morning. I mean, you look at the 4-hour chart since yesterday morning when we talked.
Yeah.
Since yesterday on the Face webinar, we've literally had a less than 30 pip trading range in the Kiwi dollar since yesterday, which is crazy that we just haven't seen any follow through, any movement. It's nuts, you know. It's nuts at this point. So, but I think that's what we have to wait towards the end of the week. You know, if I can get out of here early, meaning if I could be done with my trading, you know, here within the next couple hours, that's what I'm going to do. I'm just going to, you know, I'll still be here because obviously with ForexAnalytix, I need to make sure that there's, you know, we cover any moves that happen. But I'm just going to go rearrange my sock drawer again. My socks are really well organized right now, and I'm gonna organize them again. You know, because that's what I'm doing.
Why don't you go out and mow the lawn around 1 o'clock today?
Yeah, you know, I would do that, but I don't have a lawnmower. My lawn guy is my lawnmower, and unfortunately, he doesn't come. I could go out and pick up some poop.
You'd work up a nice lather anyway.
Yeah. Oh my gosh, it's still so nasty hot here in Phoenix.
For Blake, it's more likely going out and gathering scorpions or whatever.
Yeah. Well, fortunately, they are nocturnal, so they come out at night. Yeah. So I'll give you guys a little. I'll give you guys a little.
They trade the European session from Arizona.
Do you know how cowboys? How cowboys or early settlers in the United States, how they used to protect themselves from getting bit by scorpions at night in bed. Do you guys know how? Do you guys know how they prevented that? Trivia.
Go ahead.
They would put the bedposts of their bed.
Yeah.
They would actually put the leg inside a glass jar, because scorpions can't climb on glass.
Wow.
That's smart, actually.
From what I heard,
they would.
I feel so much more well-rounded.
What's that, Stelios?
From what I heard, they hate lavender as well. So if you put lavender around.
Yeah, I've tried. I've tried that. Unfortunately, we don't have a green thumb, so neither my wife or myself. So we've tried to plant lavender around the house, and it always dies. But you know what actually helps get rid of scorpions is really potent bug spray, like the industrial strength. We have a company that comes through, and they hit our house pretty hard, and you build a barrier around your home to where the scorpions just don't want to, because they're very territorial, and if they don't like, you know, if they know that your house or your area is been bombarded with heavy chemicals, they just migrate elsewhere, and that's how we tend to push them away from our property. So you just build a barrier around your property.
Another method of getting rid of the scorpions is not living in the desert.
That's unfortunately, if I could just transplant my entire family, I would do so. And you know, people underestimate the bark scorpions. The bark scorpions are they're very small, the smallest ones that they tend to be the most poisonous, not because they have more poison in them, just that the younger ones are immature, so they sting you multiple times because they don't understand. They don't understand. They just need to sting once. They just sting multiple times and keep injecting poison in you, and that's can kill a elderly or infant person. So that's how scary they are.
How about rattlers? Do you have any in your backyard?
Now we have bull snakes around here that keep them out, but they are known in the valley for sure.
Yeah. Okay.
Which is scary as well. I'm in an urban area though, so
I always ask myself, why did people settle there, Blake, especially before there was air conditioning?
Because there's sun like 300 some odd days out of the year, and that there's something to be said for the way it makes you feel when you see the sunlight every day.
No, yeah, just humans are extremely strange, because then I could ask the same question as Velu has said, like, okay, so my ancestors one day came to Finland that has -30 at winter, and they decided, okay, this is a good place to settle down. Let's do it. 9 months per year. In the dark.
I said about Chicago too, though, Blake. You know, why did they stop here? You know, with those rough winters and everything. But, you know, it's mainly sea lines and
waterboards.
Water.
Also,
Arizona was a gateway to California, so, you know, that's probably why.
I guess.
Stagecoach went through Scottsdale.
Yep.
You can tell how slow the markets are, because, you know,
look at what we're talking about.
We have talked about scorpions, we have talked about island vacations, and still the attendance hasn't gone down, which means that people don't have something better to do with the markets at the moment.
No, I mean, yeah, everybody's listening because there's nothing. You know, these are some of my. As I did the Morning Edge webinar. Now, keep in mind that, you know, Dale, you do an hour and a half of webinars. Yeah. I used to do 4.5 hours and a day, and then my other teammates would do the other 5-6 hours a day. It's on days like today, it's really tough to find things to talk about, especially when things aren't moving. We got a little bit of movement in equities, just a little bit, but, you know, it's nothing to get excited about, because as we've seen, there's been absolutely no follow through in the markets recently. So, you know, anyway, Steve, I'm going to pass it over to you. Maybe you can hit something up with the crosses.
Yeah, we have a few things to talk about, not a lot, as you said, but, you know, we have a few movers.
Right,
and we have a few market questions as well.
Thanks, Blake.
Hey, thank you guys, and happy birthday, Stelios.
Stelios to be 48. Yeah. To be 48 again.
Oh, he's not 48, he's 46, actually.
Oh, even better. To be 46.
So he's looking forward to being 48.
Potato, same thing.
Yeah.
You're in your prime, buddy. Make it count.
Okay, so let's see what we have. First of all, we have a few questions.
That's why she did that. Oh, okay. Now I gotta go.
Dollar yen slipping. Yes, this was actually the first thing I wanted to talk about. One of the few movers that we have is actually dollar yen. Okay, you know, I'm not paying so much attention to it, because the vast majority of the FX world has not managed to actually put any kind of movement, but the fact that we have rebounded from where we have rebounded, and we're not seeing any follow through, if we had some volatility and if other things were moving, would have been disturbing in the sense that, as we said, that if USD yen breaks below here, you know, things become troublesome, because
right now on a shorter term chart, Steve, it's either going to hold right here for a little right shoulder, or we're going to
might
get
happen.
another
We get an inverted head and shoulders. Yes. Yes, it is possible. It is possible.
Or else I'm just hallucinating things to come up with an idea. I'm not quite sure.
No, you're right. It is a possibility, but the fact that it's one of the few movers today and it's moving lower, it's a little bit worrying. Add to that, because I've showed it plenty of times ago, I remind you that one of the instruments that has been coiling the most since early June is the Nikkei. Just look at it. I mean,
isn't that a triangle 4 that a billion times you've seen that should resolve to the upside?
Listen, yes, although it's not a usual thing to see such a prolonged tight triangle.
It's too stretched out.
It's too stretched out, and it's gotten to the point that it's not easy to predict what's going to happen from here. I mean, anything can happen, from the fact that it might simply fade out and get invalidated, in the sense that you might see a break in quotes, and then a move lower, and then a move higher, and realize that simply that the range became too tight, but the market still hasn't made up its mind of what it wants to do. From actually getting a break, in which case, as I've said the previous time we talked about it, for me the most important formation here is actually the ascending wedge formation, which in essence engulfs this specific triangle. So even if I see a breakout to the upside, for example, I wouldn't be jumping the gun to being long, because then I would want to see what happens at the test of the wedge resistance. Or if we get a break to the downside, we're going to have, quite close, to be honest, the wedge support. So I want to see what's going to happen there. So, at some point this has to be resolved, and it has to be resolved quite fast, because, the range has dropped to, like, as you see, we've covered the whole range today in a single candle. So the total range now of the triangle is like, I don't know, 0.6%, something like that. So it's a range that can break at any given point. So I'm also monitoring this in combination with the USD yen. So a concurrent break of the USD yen and the Nikkei might give us a good signal. Okay, so this is something I have in my scope for sure. Thoughts on the congestion zone on the USD Swiss? Yes, let's have a look at it. By the way, speaking of the USD Swiss, let's go back to the Euro Swiss. The fact that the Euro Swiss, after this run, has not broken lower to correct, says a lot. Okay, because as it seems, it's quite likely that we're only going to get a triangular consolidation before the next leg higher. So I would advise against being short the Euro Swiss once again. Okay. Now, having to do with the USD Swiss.
You know what? That's complete experience by you knowing the fact that there was no give back gives you the impression that there most likely won't be, and that your expectations after seeing a move that there should be good give back, and if there isn't, denotes how strong and what a runaway market it's become.
It is a runaway market. That's exactly what I believe. That's exactly what I believed. If you remember when we broke above this channel.
Yeah, you were there. You were there before the breakout, buddy.
Yeah. Because I'm to tell a story. I had made quite a lot of money from trading the floor in the Euro Swiss back in the days that we had a floor. Because back then it had a positive carry, so you had no reason not to being long. It also had the potential to rebound as it did, and they took some profits once it rebounded. And I was also lucky enough to realize fundamentally, as I realized in this case, that something is changing. The fact that when we actually saw this move and the move lower and we started testing the floor again, I realized that this trade had become dangerous. So I completely abandoned it quite a long time, months before we actually broke below the floor. So
That's interesting. It looks like it wants to go back to the massacre point.
Yes, yes. Because you know something, there is no resistance.
Yeah.
There's no resistance to that point. Absolutely not.
Maybe
And
some banks held it and they'll be able to get out even.
Yeah, and as you see, there are no pullbacks as well. I mean, even if we saw a pullback to test this zone, you know, I would be very happy. I would be very happy. I would consider that to be an amazing buying opportunity. But I doubt we're going to see that from what I see here. I think we're going to go straight up for the next leg. I mean, more likely than not. You know, the more days we spend here without breaking lower, the higher the chance that we simply break higher from exactly where we are. And this takes us back to the USD Swiss. And if, which I believe that it's quite likely, if the Euro USD is currently like giving us a bear flag before at least another move lower, that means that the USD Swiss that has broken above, you know, this channel and is holding above the 96.70 zone, I believe that it's very likely that it's going to produce at least one more leg higher towards the 98.50 area. So I would say that I'm, you know, I'm not long, but I'm definitely, if I had to be something, I would be long USD Swiss. I'm guessing against 96.30, I would say, for a target of 98.50. The risk reward is there for such trade. I've closed the vast majority of my trades because I'm about to go on holidays on Friday as well. And, you know, I've had a good couple of months and there is no reason for me to monitor trades while I'm away, especially at a market like this. It's extremely slow. It's extremely boring. Although, you know, I'll be monitoring and doing analysis from there every day. So, you know, if volatility picks up and we start seeing, you know, one of the problems with having very little movement, and I'm saying that as an advice to people that are trading here, is that technical analysis requires some movement. When liquidity and the ranges like tone down completely, you get, you know, either very skewed or false signals. So, you know, it's nice to have a moving market because you have more clear technicals. So in the opposite case, it's a dangerous thing because you start seeing things that in essence aren't happening, but your brain starts adapting to a new reality. And in this new reality, signals that you would ignore in other cases, you start interpreting as strong signals. So in this case, you know, you should probably abstain from doing that and just wait, you know, for the market to pick up in pace again. That's my advice. I've been burned in the past, like years ago, by doing that, and you know, I said to myself that, you know, you're not going to be doing that again. You know, when the market like dies down, you know, you just, you know, keep whatever is profitable if you still believe in it, or just, you know, wait for it to come back in life. And I think that's the best thing to do. Now, AussieCAD. I'm going to go over some questions, by the way. So AussieCAD is one of them. Let's have a look at it. Okay, that's what we saw the previous time we got asked that question about the AussieCAD. I said that, listen, the fact that you see such choppiness in the AussieCAD is absolutely natural. Why? Because simply it's now obvious that AussieCAD is trading within a triangle. And when you're trading within a triangle, in essence, even from the Elliott wave theory, the moves you see are, all the moves you see are in essence what we would call like corrective moves. So every move higher and every move lower is choppy because none of them is impulsive. So when I got asked back there, I said that, listen, you know, there are two possibilities. We were back at the 200 EMA, etc. We either go lower from here or higher, which is, of course, that's a 50-50 chance. Anybody can say that. But no matter what you do, keep in mind that we are almost in the middle of a triangle. So what I would do here is nothing. And as you see, it remained choppy. What did we do from there? We got initially rejected from the 200 EMA. We moved, you know, lower. Now we're moving higher again. You might see the same kind of move repeating over and over again. In essence, this is a move that this is a market that until it decides it wants to actually move impulsively, it can drive you nuts and it can drive your account, to getting you losses, simply because look at it. Every move is choppy. My personal point of view, you don't want to trade this market, especially when we're in the middle of this triangle. I mean, what would you do here? Would you be long or short? And where would you put your stop loss if you were short or long? You know what I mean? So my personal advice is just stay away from it.
Yeah, Luca thinks that there's a shot for head and shoulders in the end.
Yeah, there is. Yeah. I agree with him, but we need to see it. We need to see it.
Yeah.
Aussie Kiwi, another question we had. I will tell you more or less the same about Aussie Kiwi. If I was to be something, if I had to be something, I would be cautiously constructive here, because this move higher from the inverted head and shoulders, was quite strong, but we're still being capped by this descending trend line. And in essence, you can say that we are in a triangle here as well. So I would be very cautious until we saw a break above 1085. I would definitely not be long here, because the next target is very close and your stop loss would have to be at an area that is not even, won't even provide you a 1-to-1 reward to risk ratio. But this pair is definitely going to provide us with a trading opportunity quite soon, because it's either going to test this area and get rejected, in which sense it will give you a good reward to risk ratio to be short, or it's going to break out, in which case then we're talking about a totally different market that might be very interesting to trade to the long side for a longer term trade. So although I don't see a trade here at the moment, I see the possibility of getting a good opportunity to have a trade within the next few days or maximum few weeks. Okay, so that's with.
I got to tell you a funny tweet. Remember Jeff Cooper with the GAN wheel?
Yes.
All right, so I sent him a tweet, give him a little promo, free promo. And I said, Jeff, I had a flat tire driving on the I-15. Would you happen to have an extra wheel laying around? Because he has a GAN wheel. And he went, LOL, Dale, you must be at the intersection of time and price. Wasn't that good?
That's very good, actually, yes.
All right.
We have our friend here asking for the palladium. Listen, when we talked about the palladium when we were here, this is what I drew that I expected to happen. And I think that this is exactly what's happening, but we didn't get this kind of move. So in essence, if we adapt my expectations a little bit, we already got the correction. Okay. I expect another high. And then I expect a deeper retracement. Okay. So I still expect at least one more high in the palladium before a deeper retracement. So yeah, I mean, why not stick with it?
Yeah, that was a confirmed high in June, Steve, up there. So yes. We should.
And clearly an impulsive move higher. Clearly, yeah. And clearly corrective move higher. A corrective move lower when we actually corrected lower. You remember that I said that we had this area, etc. I mean, this was clearly a corrective move lower. So why not this ending up being a 1, 2, 3, 4, 5 again, another correction, etc. Although I have to repeat that at some point I'm going to be short palladium and I'm going to be short seriously because I've been monitoring this very nice channel for a long time. And I do think that this channel is going to provide us with a very good shorting opportunity.
I know they used to use platinum for catalytic converters, Steve, and got very expensive. Are they using palladium now for catalytic converters?
Yes.
Okay, so if we're in peak autos and moving towards EVs, and there's a lot of
definitely
the auto stocks.
Yes.
Yeah, the auto stocks have been under pressure. They're not participating in this bull run in equity. So maybe you got something up there, one more top, because if that's the case, the demand for palladium should drop off if car production drops off.
That is correct.
Too much
and since we're talking about metals, let's have a fast look at gold and silver as well. First of all, gold held once again this support resistance area, which is at around 1,257 plus minus, $3. So it's holding. As long as it's holding from here, you can remain constructive for a move at the top side of the top flat at the top flat triangle. But silver, on the other hand, does not look as constructive. Of course, it might just have had a deeper correction. If you remember, Dale, when we were up here, I said that I'm expecting a correction to silver maximum before we reach this area at 1710. We never reached it. We've seen the correction. Now, is it a correction? It remains to be seen. If it is to be a correction, we need to see a stronger reaction from here. So we should not penetrate through the 1610 area again in the near future. So, silver, there is the potential for a long trade here. I mean, at least you have the risk to reward ratio. The reward to risk ratio, I mean, you can be long against 1610 and expect at least another retest of 1670. Personally, as I said, I'm going on vacation, so I'm staying flat, and I'm just saying what I'm seeing here. Euro USD, we briefly talked about the Euro USD. I think the chances are that before we move higher, we get a deeper correction from where we currently are. Okay. So, this is what we had drawn up here. I think that, it's quite likely when we do see some movement to at least see another move lower. I would want to see at least a test of 116.16, which was the breakout level here, that peak. So ideally, I would want to see a test of that. Even if that doesn't happen, I don't have something else to advise, because what is our alternative? Going long here, where would you put your stop loss? So, if you want to have a position in the Euro USD at the current juncture, your only choice is to be short. I'm not advising you to be short. I'm just telling you that having to do with reward to risk ratio, your only choice is being short against the highs, because being long would make you long against which level? I mean, if you wanted to be safe, you would need to have your stop loss below 114.50, which was the initial breakout level, but that means that you would have to target much higher levels, which we don't know if we're going to get before a deeper pullback, even if we don't get a pullback now. So currently, you're either sitting on your hands doing nothing or being short against the highs, hoping for a deeper correction to either 16.16 or 14.50. Then we can talk about being long again, because then we will have some appealing, reward to risk ratio to be long, to be with the trend. So, that's the situation with Euro USD. Now, Euro yen that a friend here is asking is more interesting, because Euro yen seems to be on the terminal, on a terminal phase at the moment, because this is obviously, I mean, I can count a 1, a 2, a 3, a 4, and the 5 being an ascending wedge, which will either break down from current levels or push higher one more time.
I'd love to see that, Steve.
Yes, because it will make it your favorite.
Yeah, if we got, well, not only that, if we get a 5 in Euro yen, we'll get a bounce in the guppy, which has been the relative weakness, a nice rally to sell in guppy to take down to your 42 level.
Yes, so in this case also, if we get another push higher in the Euro yen, we will most probably get your favorite formation, which is the 3 drive, because we already see, a reliable divergence here in the daily RSI. So the euro yen, I think, is a much more interesting pair to trade at the moment, because
So you need about 100 pip pop from here.
Or a break below here, because simply a break below here also gives us a signal, doesn't it? And
Yeah,
also
most of the FA research on euro yen is quite negative. Quite negative on a lot of the crosses.
Yes, yes.
If you're not a subscriber and you want to know where to get in on these, could be pivotal trades here. This is a big failing, you know, could be nice failing rallies to sell here. So, especially if some of the bears are finally right about risk off, they should work pretty good.
We'll see, but this complacence in the market cannot go on forever. And speaking about the complacence in the market, let me say for people that you know that haven't been following it or haven't been paying attention, that the Dow has had
the only one
has had 9 consecutive record closes in a row and 10 consecutive higher days in a row. 10 consecutive higher days in a row.
Maybe Don Mead, who I see in the house, will talk about what he's seen, that rare signal. So looking forward to the interview.
So I can tell you as a fact that if I had, I mean, if I was willing to take more trades at the moment, which I'm doing the exact opposite. I'm booking positions and, you know, getting ready to go on vacations. I would be really looking closer to the levels of the Dow to find some confluences, because obviously this kind of run in the short term at least is completely unsustainable. Okay, I mean, we already have 10 consecutive days higher, and I've seen this price action plenty of times in the past. This is what we call up with the escalator, down with the elevator. Why am I saying that? Because you have seen 10 consecutive days higher, and you can easily see then a single day that will engulf the vast majority of those to the downside.
Down is faster, Steve. After
Say again, Dale?
Down is fast.
Yeah. So, you know, this kind of, I mean, we have zero volatility in the Dow, and we have like you know, this drip higher in a sense, this slow trade a little bit higher every day and a little bit higher every day, and we're gapping a little bit higher and closing almost flat, but we've already gapped higher, so we're higher, etc., etc., etc. I mean, you know,
half the gains are one stock too, Steve. I think it's been Boeing that's been the strength. 48% of the move in the last.
You know, in the stock market lately, we keep seeing rotation. I mean, rotation in who is pulling the weight. Every time, you know, the stocks are rotating, somebody else is pulling the weight of the index. But what remains constant is that the index keeps moving higher, right? But you know, this move now is clearly unsustainable, because in essence, we've now gone from the previous actual correction that you can say, okay, that was a corrective move. We've moved 43% higher in a year. Okay, 43% higher in a year. I mean, if you look at the chart, you can see small corrections, ABC, same here. But if you zoom out, the previous actual correction that you see and you say, okay, that was a correction. I mean, that was a correction worth mentioning, was this one, this ABC, okay? And that was 43% back. It was back in February of 2016. It was like 375 trading days ago. And, you know, at some point, sooner or later, I expect, perhaps when we test this, you know, we have this ascending channel, I expect to see a deeper correction for sure. And I expect this to come sooner rather than later. I expect this to come maximum, you know, at the beginning of the fall. And I think we're going to see some very strong moves to the downside.
I know you're going to laugh at me. I know you're going to laugh, Steve, but we have a total solar eclipse that's going to affect all of the U.S. And the last time we had something like this was 99 years ago, 1918.
Okay.
So, you know, just we'll see what markets eclipse on that eclipse. Just a thought. And it's time for Don Mead.
1 second. A friend is asking what kind of software should we follow for this analysis. You just go to Forex. I'm going to write down as well. ForexAnalytix.
The link.
.com and you register there, and
Yeah.
you know you'll see. Okay.
Yeah.
Okay. Enjoy the interview, and you know tomorrow we talk about the rest, whatever we didn't cover today.
Thank you very much, Steve. Everyone thanks Steve for, even on a quiet day, pointing your eyes in the direction of potential actionable ideas. So, not easy to do. Hi, Don. I see you in the house. Looking forward to hearing your voice and seeing your screen. I'm making you the presenter. This is my first interview with Don Mead. Welcome to Face, Don. I hear you. I see.
Oh, you can hear me. You hear me okay?
Yeah, Don. Yeah, I could hear you. I could see. Yeah, it's so great to meet you, Don. Thank you so much. Yeah, thanks for taking the time to be with us today in our community. And I'd like to start with why the icon of Andy Kaufman doing Elvis for your Twitter icon.
Well, first of all, I want to thank you, Dale, for the honor of having me on here. I've followed your work for years and have really appreciated it.
Oh, thank you so much, Don. So
Andy Kaufman to me is kind of a metaphor for the market itself, if you can believe that.
In what way?
Well, I've always felt that the market's main purpose is to deceive.
Okay. All right.
It's the main purpose of the market is to keep you off balance, to keep you from understanding what's really going on. And Andy Kaufman was a master at that.
Yeah, he was.
So,
how about it reminds you of when you're right and you ring the register, you say, "Thank you very much."
Right,
Andy. So, yeah, someone already said that. So, Don, you know, I like to go back in time machines with people. I know you're a veteran, and I'm interested in how things started for you that drew you into this deceptive, trying to figure out code in the markets and directionality. How did your journey begin? Did you have a mentor, or what influences did you have?
Yes, Dale. My journey began when I was still in college. I was a psychology major. I had about a year to go before I would graduate with a degree in psychology. And I worked my way through college, and I happened to get a job in the evenings with Merrill Lynch. And my job at Merrill Lynch was to just keep track of all their supplies and order new supplies as they were required. And then later on, that went to the next thing I did for them was to take all the confirmations of transactions that came in every day and tear them apart, put them in envelopes and send them out. And ultimately I became not ultimately, but along the way, then I became the margin clerk for the Portland, Oregon office of Merrill Lynch.
Yeah, good. That's good trainings.
Right. And as a margin clerk, you know, I saw what was going on with all these accounts, especially the active trading accounts, and it just hooked me, totally hooked me. I became fascinated, and I, of course, was talking to, they had 50 brokers at the time, and I would be talking to the brokers every day and figuring out what they're doing and why they're doing it. And then I began Studying charts, studying everything I could get my hands on, reading everything I could get my hands on.
Let me guess. Did you read Technical Analysis of Stock Trends by Edwards and McGee?
Oh, you betcha.
Was it your Bible?
List, along with, of course, all of Jesse Livermore's writings.
Right. Okay. So, and technically, I see you use candlesticks. Did Steve Neeson, the use of sticks, was it him that had you gravitate?
No, actually, I've never been a big follower of candlestick patterns. I just like them because at a glance, I can see exactly what the market did in a particular time period. I think they're much more descriptive than other forms of chart patterns or chart, demonstrations.
Well, you know what? You had a great advantage coming up in a brokerage firm, being surrounded by, even though most brokers are just salesmen, I'm sure there was a lot of trading talent that you got in, that you rubbed elbows with at Merrill. And, compared to
what happened was that I became so hooked on the market that I added to my academic curriculum economics, and ended up getting degrees in both psychology and economics.
Cool.
And about a year
after you realized neither of them applied to trading, what did you do then?
Well, I think
I'm kidding.
I think psychology does.
Exactly.
I've always said that of the economics and the psychology is a far more valuable of the two when it comes to trading.
I agree. They say like real estate's location, location, location. Trading is psychology. So what was one of your biggest hurdles to overcome psychologically in trading? For me, it was having...
I will add, I became a broker with Merrill Lynch back in the early 70s.
Okay.
And so I had a 20-year career as a broker.
Okay. All right.
But anyway, your question was obstacles?
Yeah, what was a hurdle psychologically? Like, I know, everyone knows their strengths and weaknesses. One of my weaknesses is being able to stay with a trade until my target's hit. The way I overcome it is by taking a piece off and staying with something. Some people, the most difficult thing is to accept a loss and take it. And then for them not to dwell and get into fetal positions, but have the attitude of, that's just the nature of the business, next. What was it for you?
I think probably it would be just being too early. As I would do my analysis, I would see something developing, but I would always be there too early.
Okay.
And I think the obstacle I had to overcome was just having the faith and the patience to stick with something when I knew I was right.
Okay, good. That's great. So, that's my tendency too. So, trade selection is important, especially if you have a tendency for being early. Do you make your trade selections, by having some measure that says you have relative weakness and you're short the relative weakness? So even if it carries on, it's more forgiving than if you short the relative strength that's, becoming parabolic, or vice versa on the long side. Yeah. So, that goes back to the old IBD days, right, Don?
Yes, that's right. But where I think my philosophy that I've developed over the years is a little bit different than a lot of things I see on Twitter and various trader boards, is that I don't look at trades as isolated events. I don't look at a particular day in the market as an isolated event. I look at markets as a continuum. Livermore said that there isn't a bull side to the market or a bear side to the market. There's only the right side. And that just really clicked with me, because if you identify the right side to begin with, then trading sort of becomes, well, it becomes a whole lot easier, we'll put it that way. If you are right on the trend, you can make a lot of mistakes and still come out okay. But if you are wrong on the trend, you can trade perfectly and still get hurt. Right. So to me, it's all about identifying the direction of the market, not setting up trades and figuring out entry points and exit points. It's all about identifying the direction of the market.
Okay, so we're here we are with the Dow pushing new highs. Steve was talking 9 days up in a row, but I see you showing the XIV, which is the reverse of the VIX derivative, and you have a key reverse.
Now you're able to see just what's on my screen, is that right?
That's right. I see the peak in ADL. I see the S&P along with the XIV.
Well, okay, let's start there. Yesterday, as we see on this chart, the Dow Jones Industrial Average closed at a new high, new all-time high where the arrow is. Standard & Poor's closed at an all-time high where the arrow is. But now let's scroll down and take a look at things like the advanced decline line. Can you see on the screen now where it peaked about 5 days ago, where that arrow is?
That's
next one is the next one is the advanced decline volume line.
Peaked even earlier.
2 weeks ago. Next we have the NASDAQ composite. It peaked, I don't know, 8 sessions ago with a key reversal, by the way. Here is the McClellan oscillator. It peaked a month ago at about a plus 37 level and closed yesterday, and this is key to me. When the Dow Jones Industrial Average closed at an all-time high and the Standard & Poor's average closed at an all-time high, the McClellan oscillator yesterday was minus 17.
So you're getting all these non-confirmations, and you put a lot of weight on the McClellan oscillator.
Absolutely.
Okay, how about the summation, McClellan summation index? That's the other part of it. Is not so much.
Oh yeah, very definitely. In fact, why don't I don't want to go beyond my allotted time here, but let me.
Don't worry about it, Don.
Okay.
Don't worry about it. It's my show. It's my show. I'm going to be, you have as long as you need to, share whatever you want to share, and I appreciate you bringing, proprietary type stuff that you're using and sharing it with the community.
Absolutely.
Shows me you're a giving spirit.
I appreciate you giving me the opportunity to do so, Dale. Speaking of proprietary data, let's just take a look at what I call the 7 sentinels. I mentioned a few minutes ago that I'm interested in the direction of the market. I'm not interested in setting up a trade and figuring out the entry point and exit point. I'm interested in being in sync with the direction of the market. One of the something I developed a few years ago for identifying and knowing at any given time what that direction is are the 7 sentinels. Let me just
therefore your handle and the name of your website. So the sentinels are different market measures.
Yes.
Okay.
There are 7. What I do is this. I have come up with 7 things that measure the trend of the market, and my 7 sentinels works thusly. When all 7 go to buy at the same time, or uptrend at the same time, that gives me a buy signal in the market. The trend is then up. That trend will stay up until all 7 go to downtrend at the same time, at which time I get a sell signal. I can go through what the 7 are real
Yeah, go ahead.
here. And you rightly pointed to the fact that I place a lot of weight on the McClellan oscillator, and I will show you in a moment that also I use the summation. But the here is the New York Stock Exchange McClellan oscillator, NYMO by symbol. You can see the lines right here.
Yeah, the cross.
Okay. What you're looking at is the 13-day moving average and the 34-day moving average of NYMO.
Okay.
Those crossed negative about a week ago.
Okay.
The 13 crossed below the 34. So that sentinel is on downtrend.
Okay.
Now let's look at the McClellan for NASDAQ. Here again, we see the 13-day average of the NASDAQ McClellan, or NAMO, crossed below the 34 about 2 weeks ago. That sentinel is on downtrend. Here is the summation index for the New York Stock Exchange. And here I just use the daily versus the 2-day moving average to find the direction of the summation. And you can see that the 2-day, the single day today is below the 2-day, so the trend is down. That sentinel is on downtrend. Then we go to the same thing for the summation for the NASDAQ. That's been on downtrend actually for about a month now. You wouldn't know it from the way that the NASDAQ stocks are acting, but it has been.
Well, unless you're long Amazon from the high.
Right, exactly.
Yeah, go ahead, buddy.
Okay, next, so that's 4 sentinels that are on downtrend. The next thing I look at is the BP Comp Q, which is, I don't want to take a lot of time with the technical there, but it is how many of the NASDAQ stocks are producing buy signals using point and figure charts. But anyway, I chart again the 13 versus the 34 moving averages. And when the 13 crosses below the 34, that produces a sell. You can see that just produced a sell yesterday. Okay. Sentinel number 5 is on sell.
Okay.
The next is the trend, and because trend is an inverse indicator, I divide the trend into the standard and the SPY, SPY. Okay. Again, using the 1334s, when the 13 is above the 34, that's uptrend mode. It is still on uptrend mode as of yesterday. So sentinel number 6 is on uptrend. And finally, I use XIV, which is the inverse of VIX, because again, I want to use an indicator that is a positive indicator rather than a negative indicator. So with a look at the chart, you can see what's happening. Again, 1334s, the 13-day is above the 34. This is the most stubborn of the 7 sentinels. It is still going up. So what we have is 5 sentinels.
7. You have 6 out of 7.
Yes.
Confirming the same direction.
No, actually 5 out of 7.
5.
We have 5 going up. I mean, 5 going down, 2 going up. Now, I wanted to see if I can get quickly what the signals have been over the last year. I have that chart. Darn. Right here. Okay. Here is the last 15 months. And here's what the 7 sentinels indicators have done. The last time they gave a sell signal was in August of 2014. So the 7 sentinels were in downtrend. The market was then in downtrend until about the time of the election.
Exactly.
Right after the election, we got a buy signal. 7 sentinels buy signal. That means the market is in uptrend. It has stayed in uptrend now since that time. And as we just looked, Dale, 5 are on down, 2 are on up. That means that we are still up. We will still be up until we get 7 down at the same time. That hasn't happened since the election. We're very close now.
Okay. So is that what you're saying? What was a signal that you've only gotten 4 times in 52 years?
Okay, this one is much more much more complicated, but let's go through it. What you're looking at is for the last 4 years, what this particular signal, the sell signals that this particular signal has given. If we went back 52 years to 1964, about the time that the Ford Mustang hit the scene, as we remember, I'm sure.
Yes.
There have only been, well, let me put it this way. Between 1964 and 2013, there were none of these signals. Since 2013, there have been 4. So in that entire 52-year period, there have been only 4. What the signal is a measure of the 5-day moving average of net upside volume as the Dow Jones Industrial Average makes a new high. Here is the exact definition of the signal. When the Dow Jones Industrial Average makes a new high, and on the same day, the 5-day moving average of net upside volume is more negative than -1.5%. That gives a signal.
So I assume a lot of back testing to come up with these parameters.
Yes.
Okay.
Yes.
Mm-hmm. Interesting.
It's happened 4 times. The 4 times were, well, let's see.
So it didn't happen in, you didn't get a signal like that in the financial crisis, the Great Recession, which wasn't so great for me. I don't know about you. Because you're covering all these years, so that means that you didn't get these signals in the previous 2 bubbles. And
that's true. That is true.
Okay.
So this is not a signal that I depend on as something I wait for to happen, and then I know that it's time to sell. It is something that is very rare, and when it occurs, it puts me on high alert. And it has now put me on a very high alert to watch those 7 sentinels to see the last 2 fall into place and get a sell signal. We're very close to that. Okay. Here are those 4 signals. The first one occurred on September 19th, 2014. You see where it is, and you see what followed. Nice. Here's the next one on July 20, 2015. You see where it occurred with a vertical line. You see what followed.
No heat on either of them.
Pardon me?
The first 2 was almost immediate gratification. Here you had to sit through this next one you had to sit through a gap up.
Yes, I'll tell you what that gap up was. We all remember it well. It was the what is often referred to as the State of the Union message. Trump's first, otherwise known as a joint sessions speech.
Right.
So after that signal, the market stalled for 2 days, then that speech, and then it went down for the next 3 months.
Okay.
Or I should say that was the high then for the next 3 months. And then, boom.
And now?
Where is it? It's here. It occurred Thursday.
Okay.
There it is. It occurred again on Thursday, August 3rd. Whoop, I'm sorry. Well, anyway, you get the point.
No, you know what? First of all, I know that we're kindred spirits because I think you and I are the only ones on the planet that still use an AOL email address.
Okay, yeah.
And second of all, why don't you show your website now, Don, and tell us about your business model, Do you have subscriptions, or what do you market to the retail trading public?
Right. Let's take a look here, see if it'll pop up the way it's supposed to.
I thought I saw it when you were running through things.
There it is.
There you go.
There's the Seven Sentinels website. It is a subscription service. I comment every night, and then a weekly comment every Sunday, and then 4 times during the day, I update what's going on that day and how it relates to all of the trend indicators that I'm following. By the way, the 7 Sentinels, the daily that I showed you, is my main trend indicator, but I also do it on a 2-hour and a 1-hour basis rather than just daily. So we have a lot of things that we're looking at for trend. But anyway, so I publish, what, 75 times a week, I guess. It keeps me busy.
Okay. Okay.
If anybody is interested, we are.
You got a nice trial going for $9.95.
Oh yeah, you saw that. Okay,
yeah.
And that's for people that follow us on Twitter. And by the way, on Twitter I update even. So
you have a private Twitter feed for subscribers.
Pardon me.
You have a private Twitter feed for subscribers.
Well, what happens is every time I put up my comment, my intraday comment, what you'll see is, well, at any rate, I put the link on Twitter. Now, if you click on that link, if you're a subscriber, it takes you right into the comment. If you're not a subscriber, it takes you to a page that explains the information that I put out on Twitter, like every hour or so.
What a skilled marketer you are.
Oh, thank you, Dale.
So I'll tell you, at this time where we're at in the market, let's call it Providence that you were here, maybe.
I thought about that very thing. What a perfect time. You and I scheduled this a couple of months ago for August 8th. And you could not have, had you
I knew.
A crystal ball or any other method. No.
They don't call me no Dale Pinkert for nothing, Don. So, I knew you were going to have your forced signal in 52 years today. I had it on, it came to me while I was sitting in my pyramid with my 10-foot hat on.
The other thing that makes this day so special was yesterday was the first day that the S&P closed at a new high with absolutely every single broad market indicator and internal indicator non-confirming. That was the last
no follow through today. Yeah.
Right.
All right. Well, Don, it really was great. I'm so glad I reached out to you. Thank you for volunteering and having a giving spirit to share an important piece of analysis. We could tell by your voice that, you're a veteran. And sharing your story, about what you did at Merrill Lynch. It was a great interview. I'm so glad that we finally got to meet, and I hope we could follow this up down the road and see what sentinels are standing up and which sentinels are laying down. So
okay, well, thank you so much, Dale. I really appreciate the work that you do with FACE and for giving me this opportunity, and just keep on doing what you do because it's terrific.
Thank you so much, my trading warrior brother. Everyone thank Don Mead. You can follow him at 7 Sentinels. Go to his website, and let's see how things play out. Thank you very much, Don. Thank you very much, FACE. Enjoy your summer day, and we'll be back tomorrow. So most of all, Don, this is how I close my show. Don't just count your pips, count your blessings. And I'll see everyone tomorrow.
Thank you.
Thanks again, Don. Thank you, FACE. Thank you, Lucas, Simon, Thomas, Didier. See everyone tomorrow. Thank you, Blake. Thank you, Steve. Thank you, Nick. Thank you, Grega. Thank you, Stelios. Happy birthday, buddy.